What is going on, everybody? It's your boy FOREXFUNDED. I've decided to create a mini educational series for everybody who's interested. I did this a little bit before, and I deleted the videos. Don't know why. But I figured I would outline my strategy as best as I can. To me, my strategy is very simple, but that is probably partly because I've been trading for almost 8 years now. I don't like to overcomplicate things. I don't want a million indicators. I don't want hard to understand things, right? Now, at the end of the day, I am a trader, not an educator. So I'm not going to put on some facade and sound professional. I'm just going to talk the way I talk. I'm going to explain things the way I explain things. If you like it, if it helps you, perfect. If not, sorry. At the end of the day, I'm doing this for free. My Discord is in the description of this video. I send my analysis there whenever I have an analysis, right? But let's jump right into it. And also, let me say, like I said, I'm not a professional educator by all means. I'm probably gonna jump all over the place. I don't know how long this video is gonna be. I don't know if I'm gonna have 7 videos or just this one video, but I'm gonna try to pass my knowledge on to you guys. So, taking a look at this chart, this 4-hour gold chart, there's a few things that you can take note of. First obvious one is either going to be the EMAs that I use or the fact that there's a bunch of fucking lines everywhere. We're going to start with the EMAs first. I use 21 and 50 EMA. The green EMA is the 21 and the red EMA is 50. I don't really take entries based off of them. I really just use it for trend confirmation. We'll get into that later, but that's the EMAs I have. Now, the lines. The lines are gold's $160 range. The thick line, so 34.15 and 32.55, that is an entire $160 range. That's broken into 3/4 points every $40. So you can take a screenshot. You can add these to your chart. As you can see, I have them going for a lot of gold, right? Gold likes to move in between that $160 range. Now, also, I don't enter off of the ranges. You can, right? You can enter just off of ranges. You can see here, we came down into this range, right? We were bullish. We stopped around it. We couldn't tap the upper range. You started to fall. You fall into it. So you're going to come near here. You retested. You came back, right? You can trade it, but I don't, right? I use them basically just as an added confirmation, an added confluence, depending on where price is and, you know, if it's in a key level with what we're going to get into, which is fib. Those are the two main things that I always have on my chart. I always have EMA and I always have my ranges. With the EMA, I mean, at face value, you want your green EMA to be above the red EMA if you're looking for a bullish trend, and vice versa. If green is below red, so if your shorter EMA is below your longer EMA, you should be looking for a sell. Now, it's very situational. For instance, and it's going to be different on all charts. Gold is very bullish on daily, 4-hour more reactive, and 1 hour even more reactive, right? Now, 4-hour, you can see it's showing bearish, but as we're going to get into, I recently took a buy. But that's okay. It doesn't always have to line up. Like I mentioned, it is not a entry signal for me. It's just something I use to help. Yeah, so getting into it real quick. We're just going to talk about the most recent setup that I had, that I analyzed and sent in the Discord. So we can see if we start over here. I mean, it's crazy because the more you pull it out, the more you just start talking about past price. So we'll just start here, right, with this bearish push. So this push that we had a consolidation, and then we broke down. Everybody knows that this is a bullish trend. This is a bearish trend. You can even see here EMAs flipped on 1 hour to confirm bullish, and then as you broke down, they flip back bearish to confirm bearish, right? There are, using the same strategy, there are multiple entries. There's an entry here, there's an entry here, there's an entry here, and the most recent entry, which was here. So why is it that after a bearish pullback, I was wanting to buy here? It's very simple for me. Following the price action, which a bearish price action, you're going to make lower lows and you're going to leave lower highs. So here you made a lower low, you left a lower high. You made a lower low, you left a lower high. It gets a little tricky right here because technically you break this lower high, but overall the structure did not break. Now, this big bullish push broke the prior lower high. So that, as you ICT people like to call it, it's a break of structure. So when you have a break of structure, you're going to expect trend to flip, right? For how long, you don't really know. But after that break of structure, you can say, I no longer want to look for sells, I want to look for buys. So you pull out your fib from your low to your high, and me, I know you're going to ask, what coordinates do I use on my fib? I use a normal fib. I just remove 27 and 38 because I don't like them. I like what I call a golden zone, which is 50 to 61. I leave 786 because it's not invalid, and I prefer 786 over 23 or 38. And then obviously we have our inverse fibs, fib extensions, whatever you want to call it. I don't care. You can take a screenshot of that if you want. So that is where I ended up getting long. So if you go down to 15-minute, you can see the price action a little bit better. Now, I live by the saying that you primarily want to react, not predict the market, right? At the end of the day, if price would have just fallen all the way down, I don't give a fuck, right? Now, at the same time, I kind of go against that saying because I did set limits on 50 and 61. So technically, I'm not really completely living by the react, not predict, but I had confidence in my strategy. Now, if you wouldn't have set limits, how could you get into this? What would you look for? And what you're going to want to look for is a reaction at your fib level. That can come in two different forms, right? The first form is a rejection candle. Right here you have a pin bar candle from 61, body closed above 61, and the wick that went below 61 was not greater than 20 pips. I don't like to see, 37 pip. The more you break, the fib level, the more likely you are to see the next fib level. So that would have been, the first thing you would have looked for, right? And if you were watching price, you could have said, okay, we've rejected. New hour opens. You're going to buy here. You're going to put your stop 20 pips below the fib. So it's 27, which would be 25. And it's just below the wick. And then myself personally, obviously you could talk about other targets you would have. But the thing I like to really target is inverse 27, right? You could take a fib from your high to your low, and you could say, well, with the same principles that I'm telling you to get in a buy, if one of them matches here on a bear fib, maybe you want to get out. Meaning if you have a reaction from the same golden zone, right, on the bearish fib, maybe you want to get out, right? For me, in this specific trade example, the reason why I did not give a fuck to get out is because just how we talked about a 4-hour break of structure, we have a 1 hour and a 15-minute break of structure, right? Where you have the prior lower highs broken. There was no body above it, so it still is a bit risky, but that is what you have, so you are going to expect higher. Now, right now, we just had a bit of news. We had, existing home sales, which is why we're having this big fat candle. I don't really care, right? I don't care about news. I don't trade news. I don't avoid. I just basically avoid it. I'm not going to enter right now. I'm not going to exit. My stops are in place as they should be. But that is basically that setup. Now, that same setup that I mentioned is how you could have taken entries, multiple entries, right? In the past couple weeks. So, as I mentioned, let's just get rid of that. As I mentioned, we had this big bullish push. Everywhere in here, there are basically the same entries, right? I'm going to get into the easy ones first, and then we'll get into the more difficult ones. So, as I mentioned, we broke structure here. There's not many entries as you're falling down. No one wants to try to catch a falling knife. It's not the smart thing to do. However, once you establish that low and you're just sideways for a while, nothing's happening, you can start to expect that pullback. So I tell people that fibs don't really matter where you place them as long as you're using a valid high or low. What I mean by that is you shouldn't use this minor price action, right? It still would work. It still would be 7-8. But if you're going to say, okay, do I want to use the actual high of the move, or should I use the most recent high from that area? They both work. You'll have 61, you'll have 50. I normally use the entire move, so from up here. Now, as I mentioned, we broke trend. We broke the bullish trend. So you're going to be expecting further continuation of that move, right? We're just following the clues that the big boys leave for us, and that they leave, what the clue they're leaving for us is that they want to push price lower. So with that fib, you could have done the same thing, right? Look for the reaction at the fib level. Here we tap it and then you close in a pin bar. So your entry would have been from this candle. Your stop with this kind of rejection could have been right at that candle, and you would have been targeting your 27 inverse fib. Now, in this specific example, you didn't end up getting completion without getting stopped out, which is one thing I failed to mention. Is normally when I'm taking a trade from fib, from our golden zone, normally I will use 786 as my stop loss to get in the trade. Now I will be tightened up. For instance, with this kind of rejection, I probably would have put it a lot tighter after we had this movement. And then as you see price just rounding up towards the end of the day, whether you get out, whether you take partials, doesn't matter, right? But it would not have been some 290 pip stop loss. That's all I got to say. Now, that next day, in Asian session, you ended up breaking the high, but still respecting your 50 fib. You don't have any pin bar candle. You don't really have a reversal candle, but you have a body closing below the same 50 fib. So you would have been able to take your next entry. And here, for example, since we're already tapped into 50 about halfway, you're going to use at a minimum 20 pips above that 61, which is 79. So just make it easy, put it 81, right? And then you're going to target the same thing, negative 27. You can do all your fibs or whatever else you want to use. You can say, well, we have a range point at 35, so if we reject it like we did here, maybe you want to get out a little bit, right? However you want to trade it, but for the most part, that's how I look to do it. And you can see it didn't get hit, right? You were pips away, and maybe you wouldn't have wanted to hold for however many days that is, which is okay, because at the end of the day, what you have happen is from that same high, you make a low. You were not able to touch 50%. This fib has not been used for 50%. You extended the low further. Pull her back down, and there you go. Which here is a good example of two things, right? First thing would be why you might want to use 78%, right? Because here, initially, you did have a good reaction off of it. you would have entered here. But if you would have used 61 or above the wick, you would have got stopped out. But if you use that 7-8 and you target that same thing, negative 27, you're fine. Now, at the same time, we talk about reactions, right? You can have a rejection of the fib, or you can have a show of volume, right? You have a show of volume. You pushed up above 60, 61. You did not break it by more than 20 pips, I believe, right? We go from that 55.2 to your highs. You're at, okay, 320. It is what it is. I was wrong. We did break it by more than 20. But you can see the next candle immediately pushes you down. So even if you didn't get in on this candle, the next one, or the second next one, or the third next one, or the fourth, you're still hovering at that area. So it's telling you that the market does want to try and use it. So there, anywhere in there could have been your entry. And then at the same time, which this is around London, from this high to this low. The only reason I'm telling you can use this low is because you sit sideways. So it's telling you the market wants to consolidate. Ideally, what you want is you want to see a fresh low made, right? But we'll get into that. So same thing here, 6 o'clock in the morning, New York time, same thing. And here, once again, is why I don't really like tight stop losses. Because well, first of all, you really wouldn't have entered this because you never tapped 50. But say you did. Say you got in below 50. If you were using 61, it would have been tight. If you were using the wick, you would have got stopped out. But if you use 7-8%, it holds, right? And in my experience, there are more times that a 7-8 will save you than hurt you. Meaning, if you break 61, it's not very likely to see 78 hold. That is if you end up having the reaction from 61 or 50. If you just shoot straight past them, then that's where it's somewhat likely, if trend is going to continue, to see respect for 78. Does that make sense? If you're lollygagging at golden zone, if you get a firm break of it, chances are you might be seeing the trend reversal. So same thing, target negative 27. There it is. Now here is where we were, where we had that break of structure, right? So as I said, this fib was used, and then you made a new low. You have no reaction from the fib. And here's another example of why I like and need to see the fib touched. Fib was not touched here. There's no reaction from it. But if you would have entered early, you would have got fucked. At the same time, there's no reaction. We went straight through 50 to 61. The following candle, essentially the forgiveness candle, that maybe this can still work, continued higher. So nothing for you to do there. So look, that's basically my strategy in a nutshell, in a whatever this is, 20-minute video, 18-minute video. Now, you can go and practice this on whatever time frame you want. I personally like 15 to 4 hour. Daily moves take too long. But here, I'll show you an example of where it didn't work. So here we had our bullish move. I can't say it didn't work, but I'll show you what I was expecting and why it makes sense that price pulled back. So if you look at things here, what's happening, we're just stuck sideways. We have our high, we have a higher low, we have a lower high, a higher low, lower high, higher low, right? I was expecting, if you watch my analysis videos, I was expecting price to continue with this lower high towards 7-8%, right? Well, I might have tapped the wrong one. I meant to say this one. I was expecting this to give us that golden zone and continue down because we broke 61 with a sufficient amount of pressure, right? Now, at the same time, what you can say is, well, isn't this just a big-ass entry zone on a higher time frame? Yes, it is. But I'm not this big swing trader, right? We are reacting off of this. So you could say that you would take a 400 pip stop loss buy to target 100 pips. The risk to reward is there, but that's not me as a trader. But that you can see how, this is, now you're looking at the bigger time frame, right? You're looking at a 4 hour, a daily chart. you can see how you're able to relate your small time frame moves to what's happening in the overall picture. I don't really feel like going over a million different examples, but in all of this price action, which if we're going to be honest, from here to here, this was your little bear trend, which I have a feeling this was like a 78% pullback. I just want to see 78, you tap 78 and you just fall to 27, just showing you it works. But from this high to this low, we've just been sideways, and now we have this technically on a daily. This is like a bull flag pattern, right? You have like your flagpole and your bull. It doesn't matter. All I'm trying to tell you is you can go and back test this strategy on any time frame, on any time in gold, and it will work, right? The way that you look at it, it's completely up to you. I will say though, back testing isn't my favorite thing in the world because it's a lot easier to see setups in hindsight, right? You want to practice it, in real time. Get familiar with picking out what the trend is, right? Picking out if you should be buying or selling, plotting out those fibs that you think are valid, and then set your alerts. Wait for the fib to hit, wait for a reaction, and then trade, right? You don't need to trade every day, right? As I tell people all the time, think about having a prop firm account, $100,000 prop firm account. You can use a one lot size on gold. If you catch 500 pips, that's your net for the month. That's 5%. You don't need to make 37% a month. That's not realistic, right? It can happen every now and then. But you should be focused on consistent, repeatable, realistic gains. 5 to 7% a month, right? Obviously, if you're trading with $400, you're not making a goddamn thing. But you should not be trading with $500. You should not be trading. Realistically, my number is $10,000. Anything less than $10,000 is pretty much bullshit. And if you want me to be brutally honest, $10,000 is really selling it short. I don't think people should try to trade with that much money. Because the thing is, unless you're already an experienced trader, which if you're watching this video, I know you're not. That's fine. Everybody starts somewhere. But if you're not already an experienced trader following a strategy, you will form yourself to think it's okay to risk marginally more than you should, because you'll say, okay, well, if I risk 50% of this $2,000, maybe I can make it from 2 to 7. Then when it comes time for you to trade, say, a funded account, you'll be like, well, hey, if I risk 3% here, I can finish it in one trade. It forms you to be a trader that is not following a firm set of rules. And at the end of the day, that's what's needed in trading. You need discipline. So hopefully this video was informative for you guys. As I mentioned, I do have my free Discord. It will always be free. I know in the past couple months I went back and forth with, should I charge people? Should I make it free? I decided on the fact that, I don't need your guys' money. Like, that wasn't something that was, me needed to debate. But I don't. At the end of the day, I don't need your guys' money. I don't. I'm a fully profitable trader using my own money. I wanted your guys' money. I won't lie. I'm not going to sit here and sugarcoat it. We have all these people, all these quote-unquote gurus making $200,000, $300,000, $400,000 a month. And I'm like, let me get some of that pie, right? At the end of the day, I don't give a fuck anymore. I don't give a fuck. But what I will say is it would be excellent if you would trade on the broker that I trade on. Next Trade Wave. Link also in the description. Put your money there. It's a safe broker. I have over $100,000 in my accounts there. I don't have payout issues taking $10,000, $20,000 withdrawals, so you won't have a payout issue taking a $200,000 or $300,000 or $400,000 or $500,000, $600 withdrawal. And at the end of the day, it's a way for you to show your appreciation to me. I get paid based off of how much you trade, right? You don't have to. I don't care. I will try to do some more video lessons, but if I'm gonna be honest with you, like that is how simple my strategy is. And as I mentioned, it's very simple to talk about it, but the exercising and acting on it is something that has came with me trading for what will be 8 years in October, right? And the one thing that I will, I'm trying to leave you guys with some wisdom if you're still here, but if you're going to try to follow this strategy, if you're going to say, I like the way that you're thinking, I like the way you trade, it sounds simple, you need to cut all of the other people that you're trying to learn from. You need to, all those signal rooms you're in, all those analysis rooms, you need to leave them, right? You need to focus on one strategy for 3 months. You can't have other outside sources impacting your judgment. Look, there are people who I think are very good traders, who I know make a killing, but I can't look at their trades. I can't look at their analysis. I have friends who will send me analysis, and I'm like, don't send me this shit, because it will subconsciously influence my decisions. And at the end of the day, I trust my strategy. My strategy over time works. Maybe I'll take a couple losses here and there. Everybody will. But over time, it always prevails. And with proper risk management, you're fine. So if you're going to follow this strategy, if you like it, fuck everybody else. Right? And if you don't follow my strategy, if you follow someone else's, follow their strategy and nobody else's. Right? You can't be hopping around, follow one person. Second thing I will say is, look, if we're going to be honest, guys, you don't need 17 pairs. You need gold, or you need one other pair that you know how to make your personal ATM. You don't need 37 pairs, right? As I told you earlier, a one lot on gold, 500 pips is 5%. That's all you need a month. If you have a $100,000 funded account, that's $5,000. Even if they were taking 80%, I mean, that's not a good number. Even if they were taking 50%, it's $2,500 a month, right? They're not taking that much money. They're taking 20 at the most. So it puts you in a good place to start scaling up your prop firm capital, which, that's what you should be doing if you are watching this and you have $1,000 to invest. Don't try to flip that $1,000. Don't. Perfect your strategy on a demo account. Open up a $100,000 demo. Use your strategy to pass said challenge. Do it 2 or 3 times. Once you do it 2 or 3 times, without breaching the drawdown, without breaching the rules, you're ready to go attempt one, right? It's crazy. I tell people all the time what 6 months can do. In the span of 6 months, you can get funded over $1 million, slow and steady. And then the remaining 6 months of the year, you can start reaping the benefits. If you have $1 million in prop firm capital and you make even 1% a month, that's $10,000. You make 5%, that's $50 before the split, right? So sometimes you guys just got to be patient, whether it's in terms of passing a challenge or waiting for your trade or whatever it may be. So as I mentioned, hopefully you guys took some knowledge, you learned some stuff from this video. I'll try to make some more videos, but like I said, I basically covered everything I do. If anything, there would just be more tips and tricks. But hopefully I helped you, and hopefully I will see you in our Discord.